I would just introduce the fact that this is a test for something that I want to do for us on a weekly basis, which is the future up or down. Regular appointment each Monday or each Sunday, we will decide when, related to what the week was and what we want from next week. So having a plan for together, for the whole family, for the whole people here watching at the video and also in our group, in order to give a wide view of the situation, of what's happening, of what could happen, and the events that could be important to be aware of. Like in this case, we are starting with the heat map of the cryptocurrencies. Everything is improvised, so there's no specific program to follow at the moment. Maybe after these sessions I will have more data and organize the content of this kind of program with other people interacting, like a conversation on some themes and a debate also for the future. Generally, 1 hour will be enough for each week. Then we will have daily, why not, daily considerations, each one of 15 minutes, not enough, because the contents on YouTube, we need to manage the size of the videos in order to let all the people be interested about that, because if it's too long, it could be very heavy as content. So what's happening in the market? We see that we have Bitcoin against at 47, Ethereum at 3,270, and XRP, ADA, Solana, Sol, that are doing great. BNB also is doing fine. Bitcoin is oscillating. When it's gray, it's 0%, but everything is green. While if we go to Twitter or we consider what is the current influencer reaction to everything that we are watching here in this heat map, it's fake. No one has an idea of what to do now, and this is very bad because you have to have an idea. An example, you have to enter trades or exit trades. If you have Doge and you bought at 0.20 or 0.18, don't wait for it to go to 0.58, which is the target for the next run. Take some profits. So the non-action is the worst thing in the market for a trader. You always have to take a decision. Waiting for the bottom or going for an all-time high is a wrong strategy, because it's not a strategy. It's just a waiting for something, and you have to be interactive. For that reason, the words from Warren Buffett that are, if all the people are fearing the market, are scared, be greedy. That's because no action is taken from people. So if you don't move and the market won't move, you don't have the problem of watching at big moves. So you can take decisions easily. When you see green here, it's not a green like, I don't know, just fake green. It's up and down, like the name of this idea, of this program, because it's always up and down. It's never whole up or whole down. Let's go to see the current chart for Bitcoin. Just to look at it in a wide way, I just left everything, the resistances, the channel frequencies, how the price is moving. I will not go deeper in explaining what's happening here. It's on a daily time frame, but I will remark the fact that we are waiting 2 hours and 7 minutes for this candle to define the next trend or the continuation or whatever. Here I just see that this blue dotted line is a Fibonacci fan resistance that is coming from the start of this market. So it's something that was there since the market started and specifically consolidated after the first rebound of this markup phase. So we can search for many shapes here, the diamond that is going up and going up with this distance and so on. We can see a tower that is going down after that. We can see that the following sinusoidal wave, the sine wave, is effectively giving us the orientation of the price that have an impulse up here, then a little excitation and goes up here until the middle part of the sinusoidal wave, then it should fall while it's taking again the wave. This is very important. So in our case, we are going on this takeoff. So to me, this means that in a big Elliott wave view, without being so perfectly retracing and doing a perfect reshape of all the waves, this is not a three-way combo, but is the third one. So it could be this motion in order to comply with my sine wave. And since my top is here, it could be this one. It could, because we don't have the answer on what it will be. So if we start speculating and do retracing, we will see that this 5 in reality will go around here at 50,000 because it's the same proportion and retracement that we are searching for. I could also do this trick, but it will not be in line with my first line of the market, which is this Fibonacci resistance. So I have to comply with that resistance because it's there since the last year, since 2020. I have to comply with that. And this will be my following of this half stopping here, but reconnecting to the wave and taking the same impulse on, because this wave is playing, but we have to think of it like a price path, a path of the impulse. So now the impulse is taking again the step to go up. This means that we could have a Bitcoin price at around $50,000. First consideration. Second consideration, Ethereum. Ethereum, just focus, because I will show you something interesting, on this kind of reversal that we had, which is this important part of the reversal. Focus on this diamond shape, and then after that, let's go for considering where we are now and what's happening in our current situation. Just to identify that when we had people calling the bottom, and we were on Twitter and also on our chat sometimes, it's dumping. That dumping remembered me about Fate Awakened in the morning for a little dump of Bitcoin. It's not dumping. Look at the trend. The trend is up. I will not use just the same straight line, but I will use the regression trend tool, which will give me from this point to this one, how is the real direction of the trend. So the real direction of the trend is that I didn't consider these two double bottoms. I should go maybe here, and I will see that the angle is very similar to what I draw, and I go here, so just to find where the trend started, about here. Look, this trend is an uptrend, and in this case it is consistently reducing the angle, but it's obvious it's not flat, it's not a sideways or a flat channel. If we go here at the last part of the last move, the last week or more, because this is 1 hour time frame, so from 12th of August during the week, it's still an uptrend. To find the downtrend, I will go where? Let's see if I can find the downtrend. It's here. So since the 13th of August, I could consider this move an uptrend, but if I'm honest, this is an uptrend with a breakout. So I cannot consider this point. I had to go at least here. Okay, and it's still a breakout. So I go finding this, and it's an uptrend. As you can see, the move of the price is that it started going up, then went down, and then gets deeper down, and here on 15th of August started taking off. So it's clear the move is upwards, and it's a strong upward move. We had this kind of moves already in our previous editions of the patterns, here and here. So just not being a Fibonacci expert, or just being a charter like many people are, but in this case very bullish. Let's say Bitcoin to 100,000. Well, let's say to 50,000. Let's report this move. In this case, we are on Ethereum. Where will be Ethereum with this move in our case? Just playing with the chart at 3,400 practically. So is it in line with my previous movements? Let's see. Just to take a decision for my week, because I have to trade this week. I cannot wait for a decision. So I will go to search this week. As soon as the candle will start, the new candle will be defined. This is a move that is in line with what happens. I could lower a little bit here to have a contact here, and it's practically there. So nothing is changing. The uptrend is confirmed. How can one man be scared by this move? Because he is not looking at the market. The market is just one main law at the beginning to comply with, which is identifying the trend. And if you want to identify the trend and you want to use the basics, you will search for something that you all know is a higher high, another higher high, another higher high, and you will search also for a higher low, another one, and another one. So let's stop playing now. Let's see the things like they are. Here we are on an uptrend. No pain, no gain. If we don't trade, we should have been entering a trade here, because it was the point where to enter long. But we are waiting, no problem. Why we are waiting? Because we want more confirmations. I agree with confirmations. I am a man playing with confirmations. The next confirmation could be in 1 hour, because the candle started now. We had a previous red one. So we are on a point that is very critical, because at the moment it is an uptrend. We are waiting for another all-time higher high of this line here. But will it materialize so fast? Look at how it worked previously. You have also the previous models. In the first wave, it was just an up wave for a 1 hour time frame. In the second one, we had a stop here, and now we have a stop here and a continuation. Why? Because impulses are losing power. You cannot go up, up, up like the rocket going to space, because that's the moon, but the moon in the market is not so easy to achieve. Let's change time frame and go on to 50 minutes. This analysis we are doing is for us, for all the people that want to search for confirmations of what we have now, and also for the people that want to have some tools to search for confirmation. You just have to turn on your trading view or your favorite chart view and go here and search for moves. As I said, this was a wave completely green, but look at 15 minutes how we have the red candle here. So when I see this confirmation, let's go to 5 minutes just to see. On 5 minutes, we have this right, this stop, and here we have two stops again, and here we just have one stop here. So what's happening? It's repeating the same pattern. Now it's late to take the good train and inverting in Ethereum from these points. You could take the half that is still here and enter the trade, or wait for another confirmation. Look at this price, let's say consolidation, because it's not just a correction. This is a typical ascending wedge, but why? Because its shape is generally very instinctive to spot. So when you have this kind of move, without being so perfect, because patterns are not laws, they can materialize or not, they can go up or down. Look at this pattern. This is a strong reversal on these points. So it was going down and now it's pointing up. This sign is stronger than whatever other signs on this sideways, and it is of the same importance of this big move here, all of this one, which is a reversal from up to down. But in our case, it's way compact. Look, sideways with the move. Can be a diamond if we go to maybe 3 minutes. Let's search for it. Maybe we will find that we have some diamond formation, very similar to a diamond, not perfect, but like this one. Or I will use the path comment. There. So this is a diamond that is entering with this shape and exiting with this other shape. So a reversal sign, typical of these formations. Nothing special, nothing incredible, but something that we have to spot in time, because this was a great trade. From that point, 3,111 or 22, up to now, and to the next goal that is 3,350. So for being scared about what crypto Twitter is saying and what some kind of strange things they are saying because they are scared about a dump or a pump and they don't know how to do that, we lost an opportunity. Not me, because I was in, no problem. But since I was calling my mom and doing my things, I didn't brought the message to the chat. But I want you to be interactive with yourself and change your mind. You don't have to be scared about trading, because this is the main problem of our days. People are scared about trades because they don't want to risk. But risk is the main component of your trades. You have to risk. Risk management is your key. So in this case, at that point, we had a trade opportunity. Lost. No problem. Let's go to enter this one. Well, it's a little bit late because we already have the two double bottom here and the retrace, but we can enter. What will happen? Entering this trade will be probably the same that happened here, but it could also be this shape, because it would be something that go for a rebound. So I could wait. The point is that I had to be in at this moment, at this point, not at this one, because now we will have that retrace. And look, if we follow the patterns of the triangles, here we could be stuck, because this is a bearish triangle. Oh, it's correcting this way, so it could go down, or it's a wedge. Now it's not ascending. I would transform in ascending because I want to go up. The worst thing to do is base your strategy on patterns and similar things. These are conditions. So if it's like the strategy to trade, if you want a condition to be just a strategy, or a whole strategy based on one condition, your strategy will miserably fail, and it will be sad because you will lose money. you have to add many conditions. We have seen a strong pattern here, reversal. We are on Ethereum. We go a little bit 1 second to Bitcoin to see how it's performing. Fine. Now let's go to see the outsiders of this week, the past week. We had Solana. Look at Solana. This was an investment to do when it was here, but it was unknown until this point. Solana performed like ADA and XRP in this last week, and this is a very important sign in terms of crypto because, first of all, both Solana and ADA are going to the all-time high. So if you want to enter a trade, enter it here to exit after the all-time high. Where will the all-time high stop? Nice question, but in this case we can forecast this fast in order to spot a target, and we take just this pole from the up part to see that we should already be at the point, and now we add a rising line like this one, but honestly not from the peak but here, and we can say that this move up will go up here around. It's like empirical fast way of identifying the options. So identifying this option, I have no resistances. I just have the resistance of the all-time high, which will be broken in 1 second because it's obviously the enthusiasm that is driving this market, and I will go up to the next limit or waiting for similar signs, oscillations. I can add indicator and so on. So this is Solana. Let's go to ADA. Let's go to ADA to see what happened there, and also to XRP, because these are both important parameters for the current situation of this week and of the incoming one. And I will explain you that this is not a joke. I mean, XRP, Solana, and ADA are disconnecting from the direct relations that they had with Ethereum and Bitcoin. So they are becoming what could be called alpha coins. They have their own market, their own infrastructure, they have their own behavior, practically independent resources. So I don't have just one thing to look at, or Bitcoin or whatever you want, but I have everything now. I have ADA. I just drove some lines to understand how this performed in terms of distances. You can see that these pseudo rectangles are very similar in dimension. So the next thing that I will do is to drive or a gun fan or a Fibonacci fan with gun and finding timing to see how much this will go up. Let's take out everything. You can see that here this is a good opportunity to enter ADA because we have a retrace from yesterday, but the retrace is a cross here, and this cross, although it seems a dodgy bearish sign, it is not necessarily a dodgy bearish sign because we have 1 hour and 48 to close, and it could be a hammer, a green hammer, and this will mean enter the trade. So this is my interesting point, and what I would do is to add an alarm. Add alert here, because if we go here before the closing candle is materialized completely and we closed at this distance, I will be in the condition of identifying another hammer like this one, and so another cycle. Look, this is amplification. A candle, another candle after the hammer, another candle here trying to stop the price, but the hammer. And here, this candle, it is way better from this instead, let's say, compared to this one, because it's a balance candle. And look at these little spikes that are practically identical in daily time frame. So here, this is a sign of a powerful move. And if it's powerful move here on the first day of the week, it will be crossing the all-time high. So my trade is good if I take it here on green candle and not waiting for red to close red and to open another red on a daily. But it's my, let's say, sign. So I add an alarm there, not so attached, by the way, a little alarm at where I could enter the trade. And then I have a trade that is about 20%. So it's not a long-term trading, but it's a nice trade to get in a couple of days of the next week. Second trade, XRP. XRP is adjusting. I was considering that it was going to correct more. Instead, it didn't. What happened to XRP? While my estimation was pessimistic, because I was thinking on Bitcoin and the other part of the market, the correction happens like this one. Let's say here. So now I just have finished my correction waves, my set of correction waves. I just have impulse waves. And to identify where the waves will go, because we have to be honest, not like the whole crypto Twitter Elliott wave retracer. When the trend goes up, you follow the trend, but if the trend goes down, your impulses will be downwards. So how is the market performing now? Higher low, higher low, higher low. Higher high, lower high. I need confirmation. So let's see. This is another lower high. Price consolidation, not Elliott wave theory directly, but it is. So I could be pessimistic and do this one and understand that this path will probably give me this situation. I can also add more things, but in example, spotting reversals, I can add an indicator to spotting divergences, and with this one, the most complex, just to have FUD. And here I see that I just have a balance on hidden and another hidden divergence. One is bearish, the other is bullish. So I don't have data on 1 hour time frame. Let's go to 15 minutes, because reversals and divergences, you go to less time frame to spot some effective divergence. What I see is here that this bullish hidden divergence was already applied. Now there's a bearish hidden divergence on 3 indicators and probably will apply. But this is a point. Will it apply just like this and continuing upwards? Maybe. So I can switch to 10 just to see if I have more. On 10 minutes time frame, both divergences here are, this is real, not hidden, so regular, and this one is regular too. So looking at this one, the correction is already performed. So now I'm having a real important price adjustment on this sideways on 10 minutes time frame. Let's go to 5 to see if we spot a little bit more clear formation. Well, to 5, you can see that it's a flag at descending. Let's call it flag, why not, or wedge, whatever you want. This is a formation that generally, since we have an angle, will go upwards. So I will add another alarm. Maybe it could also be done in another way if you want. Here on TradingView you have triangle pattern, and the triangle pattern follow the typical Elliott wave formation for triangles. So you have the triangle that is here broke down. So if we had in trouble thinking about the broke down or break up, look, while we were talking, two hidden divergences are now spotted on the upward move, and if we follow this at 3 minutes, it will be better and maybe stronger here on the little. So we have the directions. Now we can change these waves to be here and here, C, and finally D. And you see that we are still breaking down little triangles, but the biggest one will be probably breaking up. So at this point, more or less here, I will add my alarm to prevent being blind on the next possible breakout. And we have two alarms now, ADA and XRP. No matter what will happen, we set alarms. Why I'm doing this? Because I'm focusing on the things that I was saying. It's important. Do something, organize your trades, but don't stay waiting for the things to happen, because then you will be sad, because you will say, I lost the trade. I was in ADA 1 week ago and I exited and now I'm not in. Well, get in again, but do it when the conditions are met. And don't wait for the all-time high, because it will be late. Or if you wait for the all-time high to short, consider that the all-time high can be at 3 all-time highs. And you will short 3 times and lose the short. So it's better to take the trade in the trend direction, or to wait for divergences confirming the change of the trade, but the change of the market direction of the trend. But it's better to go with the trend if you spot the trend correctly and you know that the trend will effectively keep going up. So this is something that I do with you, but you all should do alone, and then come to me or to the other guys saying, look what I found. Because I'm not a scientist of these things. I'm just using my eyes to see exactly the things that you see. And I'm focusing on the point that I'm not using specific tools like Gann, Fibonacci. No matter, you will learn that, and it will give you confirmation to have trends for the next phase, and when you will be better on technical analysis. But now lines and logics is just what you need. You don't need anything more than this. So in this case, we are on Solana. I need a sign too. And everything is related to the same wedge. What will be this edge? We can follow the patterns, whatever you want. I don't follow the patterns. I don't care about the patterns. I follow the alarms. This is going up. So if it keeps going here, I'm interested in this move. And I add my alerts here. I have three alerts. One thing to note is that I found that alerts can be also sent to Telegram. I will do for us a channel where you will have your options to ask for an alarm, in example, or to see my alarms. Like I'm putting these alerts here. We are discussing the trade. The goal is to have 5 minutes on each trade discussing why this alarm is here. And if you find there the alarm, maybe we will publish in the future the idea on TradingView common account of the group, and you will find the strategy too. But try to be interactive and to understand that if we have an alarm here, it's not too short, because we are following the trend. And when I will set the alarm here, I will also add in the message crossing here, and the alarm will show it's a long position possible, etc., etc., and everyone will see this in a Telegram sub-channel of our resources. So this is also a goal to comply with. Now that we talked about all these things, and we have alarms for Solana, XRP, ADA, and also I think Ethereum. I don't know if I set the alarm. Let's go to see on a daily basis. I didn't. So remember that we are here to see really the weekly candle, because today in 1 hour 37 minutes the weekly candle will close, and on Ethereum it was a green candle, so nothing dump down. I don't see. We have to look at the surface of the planet Earth from space and see that we are seeing the whole United States, not just the shit that we can go hitting with our foot when walking on Chicago streets because there was a dog in the park that did that shit. We have to look at the whole view from high, and we see United States, I mean green candle. We don't see the little detail that I told you earlier. So this is important, and I want to see how it closes, how high. Look at here, we have a resistance. So if this green candle will close up this resistance, I am bullish for the week because I'm crossing a resistance point. Let's go to Bitcoin. Similar thing, but a little bit different because I have on a daily a correction here. Let's go to weekly because I'm here for weekly. Oh, another green candle. Let's see. Closing above the Fibonacci resistance. Well, let's add moving average 200 and whole moving average 104 for the weekly time frame. Okay. Oh, we are still far from the bull market here, so it's a target, but we didn't hit this resistance, this natural resistance. The 200 moving average is here down it's a red line here. Let's say that I'm more interested in see these lines on a daily because I want to see where we are really regarding the 200 moving average, which was my target to understand the market. Look, the 200 moving average is this line, this red line, and we had a retest on it and we are rebounding, and now this candle is green, and on a weekly basis we are going to close between these two main lines. So the current move is bullish because it's a rebound on the 200 moving average. This is very important to start thinking about a bullish week or about a week where I have to enter trades on long term, 1 week, one swing, and I have to think about this swing, which is daily here, to be tradable on 1 hour time frame, and the swing is here, and I have, let's see how much margin I could have adding some price range here, about 11%, 9% to earn in 1 week just on Bitcoin. 10% in 1 week is 30% a month, and I challenge you to find a bank giving this kind of interest. If you take your money in 1 week, you have 10%. Maybe usury and people working with black money or blackmailing someone, but not investing easily 10% in 1 week, just in 1 wave. So consider this. We are a little bit late. It's not 1, it's 7% now, but we could have a retest and follow this. So follow the wave. Don't look at it's dumping. It's dumping the mother of who is writing, but not Bitcoin. Bitcoin is just having a flexion here. It's normal. It's a healthy dump because we need to go a little bit down to enter our trades. We don't want to enter here. we want to enter here down. So this is the wide situation, and to me this means that we have to think about bullish options for this week, not being too much bullish because we have to check for signs, but it's not dumping. So it's confirming exactly what already saw previously. I also drew this kind of 1, 2, 1, 2, 1, 2. Very not perfect art, but it's doing a 3 drives pattern, and it could reach up this point, which is around 49, let's say 49.50. It is possible, it's not a joke. So let's take that swing, please, and don't be scared. Now this is the view. We are waiting for 30 minutes candle to close, and it will be in the next video section probably, because I entered the current recording with you too early with respect to with the candle of the weekly candle. So 1 hour and a half should be something that we wait for. We will talk meanwhile of many aspects that are related to crucial decision and to real patterns that you have to spot on to have a clear idea. So let's go to patterns. Let's go to what I have here, like slides of PowerPoints, and I will do this work compacting everything and trying to give everyone the option to understand that generally we have patterns. I will just slide on each one just for you to remember that the head and shoulder could resolve this way. That's an aggressive reversal. For that reason I said look at that pattern, look well at what we had when we had the reversal, and look that this is not related to let's say something that is invented or for a specific asset. We saw this combination. So when we see this kind of building pattern, it is very probable that we have a reversal. And looking at the triangle or wedge, the reversal, checking the bottom part of the possible triangle at the same level many times, will lead us to an explosion pattern to the upward move. It's not always the same way. It depends on if you are entering this pattern, this triangle, from up or down, because if you are entered for down, it is probably a down move. But another one, the double bottom. The double bottom is always another kind of move that lead to a reversal and the trend continuation after the first check. So this pattern are something that you should be familiar as time goes by, each time more, in order to see that what I was setting evidence earlier, the market structure, a low, a high, then a higher low because it's higher than this one, and a higher high. And this is the uptrend. Obviously, the downtrend will be the opposite situation. These are very important things to decide the ranges of trade. If I'm trading here in this range on this high and this higher low, I know that I will be here. It's like it's similar to the way that supply demand traders use, because they are knowing that we start from a low, we go to a high. When we fall to the higher low here, because we are in uptrend, the price rebounds, so they trade up, and they are looking at this high point to be broken. If it's not broken, it's arranging sideways or parallel channel, they will exit on minor profit and they will wait for another condition or another check on the higher low or something that will go dropping or something that will be rebounding and testing again the higher. And this is like ping pong games. You always do this with the trend. If you want to spot these points earlier, you have divergences. So you look when you are going to the higher low here, or a formation that looks we are approaching this higher low, I will look for the trend reversal on divergence here, real divergence or hidden, regular or hidden, it's not important, to spot what could happen. And when I spot this move, I will start trading the trend here, and I will follow, taking a look at this level because it's important to break it. If it breaks, it will go up, then I can use other Fibonacci retracement with the type, but this is so logical. It's very easy. You start from a low, go for a high, higher low, higher high, higher low, higher high, and so on, until a reversal. On reversal, you do the opposite, but not impossible to trade longs in a downtrend. It's like the same. You, instead of taking the counter trend reaction, the consolidation or correction of the price, you go for the other part on the downtrend. Here there are types of divergences that you can spot. Not just the direction, but the oscillators. Also, always the indicator of a divergence is an oscillator. So the unbalanced volume, the RSI, the money flow index, there are many oscillators. When you are searching for divergences, look at the oscillator. There's another things to look at that we will consider in a few, which is the average true range move of the price, because it's let's say another kind of indicator that is one of the best one, because it could just trade with the average true range, looking at it and do some historical data on the price. Let's see, let's just do this for Solana, in example. Let's add the average true range indicator, which is just a line I use in the strategies to find the best stop loss. Now, the average true range is not something that is identifying the trend or something else. When it's low, it means that the volatility of this market is low. So if I unzoom, I'm on an hourly time frame, and I take this line and I go for an horizontal line, and I start searching the lower point, and I draw the line here, and then I start searching for the highest points, and I draw the line here. Well, at this point, I know that more volatility I will have here, so more swing and trading range here, less I will be here. I will have here. What it means is that you can search the move of the trend and the strength of volatility looking at this line. And what it means is that if you enter a trade, in example, here or here, where exactly this line matches, you will have the option to catch the move from here to the maximum volatility. Here we have no volatility. This is a confirmator of your trade at the moment, because you took the trade, let's say here, when the divergence was saying it will be up, and here when you have a regular divergence saying no, it will go down, the down was here, it's because of the volatility. Look, Solana now here we are crossing that point. So personally, let's simulate just to see. I'm crossing this point. I don't want to wait retrace because I am a man that is impatient, and I'm taking a trade. Well, I will not take the trade exactly here, but I will take the trade on what could be the retrace of this. So personally, I will set my stop loss way low because it's a long trade, so I will search for the other candle. At the moment I could use this. Why I will use the ATR for a stop loss? Because it's indicating how much the price can change during an oscillation. So 1.477 is the value. Let's say 1.5 to multiply for 3 and have a 4.5, which is the difference in terms of price that I'm searching to set my stop loss. So if it is 53.3, I will search for 49.7 or 0.8. 49.8 is here. So as you can see, using my eyes was not bad. 49.8. Let's put the stop loss here, and let's target, just to see if we are in line with our trade, 1.5 risk rewards, which is the minimum to consider. And let's see, this 1.5 is in line with my targeting all-time high. Let's go to daily to check. Well, it is, and this trade makes sense. So I could risk my trade so high because of this. Let's take this one and draw this possible A line. Then we go Ctrl C, Ctrl V to replicate this line, and let's go to set this line without changing the inclination to this all-time high. So this will be my first look at the profit for this trade. Of course, if we pass maybe the second, because the first will be this one. And finally, my exit on happiness will be the end of the trade. This should stand maybe 1 week or two, because we are on a daily time frame. So going another time to hourly and extending this, we can have more data and we can move with the others. Everything here, that's about the level that we want to get in. And as you can see, am I using indicators? I'm using the logic and the psychology of the market, so I don't need indicators really. Of course, I'm using the ATR, so I'm using just this line to understand that my volatility is increasing. So I have to take care of the volatility, because if I don't set the correct range of stop loss, I will be kicked out. The more the volatility, the more the price moves. For that reason, I multiplied the instant on this moment of the price, this period of this candle move, which is 1.498 per 3. To be sure, I can multiply for 1 and for 2. There are 3 types of trades. I could trade safely and just go down for 1.5 of the price. So if I enter the trade at this level, it is 51.8 here. I could enter this trade multiplying just for 1. Yes, here, around here. Let's say here, and go for 1.5. So this trade will be very reduced. And if I do the other and use 2 ATRs, as you can see here, it's just 55, maybe 1%. It's a day trade or less, another way. But I'm sure this way that I'm entering a possible good trade, but I could be kicked out here because I'm just using one period ATR, and this could be just one candle. So if this candle reduces, or the next one starts red and goes down, will hit my stop loss. While in the other case, I will survive and I will catch the second wave in case. Can be avoided with retracements. So going back to PowerPoints, the oscillators, including the RSI and what generally you use more, in conjunction with the ATR, can give you practically every kind of tool that you need to enter and exit a trade. Let's consider that we have also the trend breakouts. That is something that we always look for. And when we have this trend breakout, generally means that we are passing from bear trend to bull trend. So we, instead of searching for higher lows, we will search for lower high, lower lows on the bear trend and vice versa on the uptrend. The tools, look at these tools. The price action, we consider the price action. When you look at the chart, where are we going with the price? It is volatile or not? It is sideways or not? The support and resistance, as I told you, lower high, lower low, fundamental things to trade and to spot the correct range. Because if we are going sideways, but we are on very high volatility, we have trends from one point to another of the parallel channel. The main point is to find how much volatility I have. So when you are sideways, look at the ATR. If it's high, or on the middle point of the, let's say, indicator, on the 0.5% of the indicator, consider that the trade could be good also on sideways. Trend, the direction, of course. Fibonacci tools, we will treat this, consider this in the next section and not in this that is more related to the market decisions and orientation and why. But it's very important because it will give you the ranges to capture when to enter and when to take profits. And the chart pattern, of course, you have to look at the chart. I think that 6 different price action patterns. Now focus. What is a price action? Downtrend, consolidation, uptrend, downtrend, reversal, uptrend. You already know about this. Everything is known for you. So lower high, lower low, lower low, lower low, and higher high, higher low. It's so easy to get a logical view of these kinds of things. So do that because it's something you have to think about. When you have patterns like this, many are calling the cup and handle, but sincerely, could materialize and could not. It depends. Not means that you cannot absolutely base your strategies on just the fact that you spotted a head and shoulder or a cup and handle and so on. If we go back to charts and you find something, I have an alarm now. Who is alarming us? Let's see. It disappeared. So I heard a sound of the alarm, but I don't know what alarm is. Maybe it's Solana doing up and down. So let's go to 15 minutes time frame and let's find the patterns. We will search for an example, this one. As you can see, it went up and down, and so the first confirmation of the cup and handle should have been just up, but it went down because it's a complex pattern. Here, look, this is the classical example. Perfect, that one. So let's take the tool, head and shoulders. Let's try. Let's draw this head and shoulders. and let's adapt it a little bit more. Now the theory says that this head and shoulder should, we take the upper thing, go for this move, and it doesn't. Now you will say, no, because the head should be higher. Well, it's higher. Now we will take the line and we will draw this one to see, is the head higher? It is. So the pattern is a head and shoulder here, but instead of going down, it went up 2 times. So don't believe in the patterns. You can say that this pattern is a head and shoulder that is really poor, that is poorly verified. Okay, but it's a head and shoulder, and its price action is counter the theory and the statistics. So you have to follow not just the patterns. This double bottom, in this case, resolved up as it should, but this one was a recheck higher, and this is a bearish grab. So, and this one is a bullish one. That's very hard to, and we are just on a 50 minutes time frame. On an hourly time frame, it could change. Really, it's important to consider the option and to know that on that head and shoulder that was around, I don't know where, but here probably, I will have an option for a price action on going down or moving the trend downwards. But really, it will not grant me the success of a big trade, and I will not be rich just looking at head and shoulder pattern. So going back to PowerPoint, cup and handle, useless, really useless. Let's consider the market cycles. When we look at the market cycles in the past, like this one, everyone found that this shape is very similar to the Bitcoin one, because we had the retest, the people saying, oh, I'm euphoric because it's a all-time high, then here I don't know how to manage this situation, complacency, now we are bullish, and then, oh my God, it's falling down again. No, it's not possible. I want to sell everything. Capitulation, anger, who crashed the market, where are the market makers, I want to kill them, etc., etc. And this psychology has been wrongly associated with curves. It's wrong because this is a psychology of a market cycle in Wyckoff, in example, with more candlestick patterns and considerations, but this is not a real market cycle. I will show soon something that will open your minds on many things. This is similar to a market cycle, these points, but look at this. Do you think that this market will necessarily goes down here because it's what you have seen during these days and you are convinced that it will go that way? Well, you will know in the next episode.